But there is a good portion of silver that is leaving the system, leaving the vault in a truck, and off it goes. And that silver, which is a lot of it was a portion of the 300 million ounces that that India imported last year, leaving COMEX, leaving the LBMA. When it leaves the ecosystem like that, it's gone for good. Because whether it's a client who ultimately decided to keep it at Brinks JFK over Salt Lake City, even though she preferred Salt Lake City, or someone on a much more industrial outlook who is keeping it there, looking to capitalize on the industrial properties or potential of owning silver. When it leaves, it's never coming back. And that's really what I was trying to get at with all of these deliveries leaving the ecosystem. It speaks to a one-way ticket because you can't then take advantage of the industrial liquidity. And it really matters in silver, albeit we're seeing a lot of gold leave too. But with silver in particular, when it leaves, I don't think it's ever coming back. To me, the hardest part is to try to understand, explain this and help people understand how the supply chain issues, how the premium issues have vacillated so much. And quite frankly, it mystifies even myself. And I guess we'll have to see if this is the beginning of a sustained period of reasonable premiums, or we're just going to move right back up into supply chain distortions and supply chain problems again. I'm not convinced that we won't, albeit, even at these levels, you're still roughly 5 to 7% higher than we were my whole career, premium wise. That's not much. That's not an anomaly or something to look at cross-eyed. But the question is, do we stay here or do we move back up? And part of me really feels like the mainstream has such minimal participation in this market yet that the minute they wake up, and whatever the catalyst is that wakes people up, you'll see things go right back up again, because I think there are too many people believing in this soft landing and believing everything's going to be okay, and they'll normalize the balance sheet and all of the same way it's always been, unless this time is different. Part of me believes it is. The percentage decline, the speed in which it's declining has certainly slowed down quite a bit, but they have still come down to levels that I think are without question the most affordable we've seen in quite some time, going all the way back prior to 2020. These are premiums that I honestly am shocked that we are at these levels. I'm happy to see it. It certainly makes buying sovereign coins much more attractive. It makes buying all silver items much more attractive. But it really shocks me how they went from such stratospheric levels for 3 years, from the very, very top of the food chain. Every source that I scoured throughout the universe to buy this stuff was selling items at 3-4 times premium what they're being sold for right now. And then just like that, everything's come down. Now, I'm not convinced that this is not going to just turn right back around as more people start jumping back into this market. But right now, unequivocally, across the board on every silver item that we sell, from 1,000-ounce bars to Silver Eagles, the premiums are the lowest they've been since literally 2019. And I guess we'll have to see how this plays out with premium, but I'm very comfortable in recommending things at these levels. And I think a lot of people would have been happy to pay these prices a few years ago, all the way up through just recently here. The commercial banks are buying and selling and buying and selling and buying and selling in so much volume. Ted Butler talks about this a lot. Yet the net change is like nothing, because it makes it look like there's all this volume. But what we're seeing right now is a more realistic semblance of reality. And if you figure that most of the sovereign mint coins, the Krugerrand, the Philharmonic, the Maple Leaf, the Britannia, the Kangaroo, these are all selling somewhere between 350 and 375 over the price of silver. That's not too far away from where they always were, maybe a buck and a quarter above it. But most of the last 3 years, you were seeing $5, $6, $7, $8 over the price of silver, and often with delivery delays. So it's really turned into a buyer's market right now. And I think there are people, when people are looking to buy, They're certainly very happy. And so I think people are waking up to the lack of alternatives and wonder, as rates continue to rise, what pressure is that going to continue to put upon this model that hasn't been, I guess, reevaluated in terms of strategy forever. And so what you have is an awakening, I think, and an awakening by people looking at their statements saying, my God, even the hedge, even the portion of my portfolio, the risk off portion that was there to protect the risky portion, has probably done worse than the stocks. And as rates continue to rise, what's going to happen? And so I think what you're seeing is a realization that, there has to be another alternative out there to just gold and silver. We are seeing, I believe, more interest from people, not the people who've been listening to you and I forever, but the people who are just fed up with listening to mainstream rhetoric and looking at their statement at the end of 2022, realizing that 2023 could be much worse. The Fed says they're going to continue to raise rates. What happens? And I think that's the overwhelming theme. And we're getting a lot of calls from money managers too, who are echoing something similar. We have clients looking for alternatives to the bond market. And I think gold and silver, if I had to guess, will be the primary benefactor of that type of thought process here in 2023 as rates continue to rise. It's as if the light switch is turned back on, but it's not the way that it was yet for most of 2022. I think certainly we will get there. It's just that things are beginning to unfold again. People are coming back and getting into the swing of things, but not like what we've seen on any level for the last 3 years in terms of panic and craziness. And but I'll tell you, there's always this common theme that when we talk to people, they're very, very concerned. I guess the overwhelming topic or the overwhelming theme through everyone is getting their money out of the banks as fast as possible. And when we do orders, it's always about how fast can it get delivered? When can I expect to receive this? How fast will it clear? What's the fastest way to get you funds? So the anxiety is still there. People are still very concerned about what's going on around them. And, I guess it's just been a little bit quiet on the political front. It's been a little bit quiet on the geopolitical front over the last, few weeks. It's still a good time. It's a good time to add because premiums are still really, really low in comparison to where they've been for the last 3 years. And availability is really, really good in comparison to where it's been for the last 3 years. So a really good time to enter if you've been waiting for that pullback. This is the time. I know gold and silver have performed well, but the premiums haven't jumped yet. And, that can happen like that, or they can stay here for a while. All I know is it's the best premiums we've seen in 3 years.